And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Hello, everybody. Welcome to the Coach's Playbook, the live show that is not live today because we're having problems with our YouTube account. And that kind of plays into the topic we're talking about today, which is fear and loathing and how it affects the markets. We're joined today by Carol Jorison again. Carol, thanks for stopping by. Sorry you can't ask your live questions to Carol, but maybe next week or the week after, we'll get to them. First, we have a trader shout out before we get started, Mick.
Shout out to Steven Metz. He's up 4,400 trading the S&Ps today.
Nice.
Good job, Steven. More brief housekeeping before we get started. There's a cherry picker outside my place doing something to the windows of the people above me. I think they're on a lunch break or something, but if you see me drop out or mute, that's what it is. Also, my wife is making a pie. This just occurred. Well, she said because I'm a cartoon character. She's not a cartoon character. It's just our schedule is nuts right now today. But anyway, let's talk about fear in the markets. Hogue, we're going to start with you because you have the most experience in this. There's a lot of geopolitical stuff going on between Afghanistan. We have the Delta variant. And I thought maybe you could put it in some context, and then we'll go to Carol.
First off, what kind of pie? Is it a cherry pie? You got a cherry picker out the window there.
Yeah, it is a key lime pie because it's my dad's birthday tonight, and well, the in-laws are in town too, and it's his birthday too. A lot going on in my life right now.
Tell them happy birthday from all.
I will be sure to tell them all happy birthday.
All right, so fear in the marketplace is always present to one degree or another, and there's, I think, a bunch of different layers of fear. When we look at what the S&Ps did yesterday, they just ground higher and higher on just no give back. To me, that's a function of fear. That's a fear of missing out. And all of the fears that we have in the world right now with COVID and everything else going on doesn't seem to be affecting the market that much. And I think it's that fear of missing out, an unreasonable confidence that has kept the market moving to the upside. I mean, everybody's kind of amazed that with everything going on, the market has still been able to continue to rotate higher and higher. And, is that a function of confidence or reality, or is that a function of fear of missing out? To me, that fear of missing out is probably the most diabolical thing when it comes to trading, is everybody is always afraid they're going to miss out on something. And, I thought that fear of missing out would be a good way to start this conversation.
I think it's an excellent way because that's, I think, the fear maybe you have the most control over as a trader. It's all within yourself. It's your decision. It's not an external factor that's happening, like something bad. I think that's one of the most important things you can basically control as a trader. Now, today, we're recording this on Tuesday. I have to say that because we're not live today. Right now, the ES futures are off about 50, which these days is a huge move. So there is some reaction to maybe this has to do with retail sales were a bit soft this morning. Everyone's kind of in this holding pattern. So it'll be interesting to see what happens next. So, Carol, you were in the industry for a long time. What are your general thoughts, not to get too broad, on sort of fear? It could be FOMO or event or otherwise.
Well, I think a big part of it is what is your personal history with market catastrophe? Mm-hmm. And for me, having been standing in the pit when some terrifying things have happened and the market is crashing, I almost have like a PTSD reaction. And I tend to, like yesterday, I looked at the market. I didn't put a trade on because I had a lot going on. But if I had, I would have gotten short and just walked away and said, I'm going to let this ride and see what happens. Because I looked at yesterday and I thought, well, over the weekend, I thought things aren't going well. We could have a big move down on Monday. But I didn't do that. And today I looked at it again and I said, okay, we had this spike rally yesterday and had a little FOMO of, boy, I should have bought that dip because that's the way it's worked for the past couple of years. But I didn't. And I looked at it today and said, this is weaker, a lot weaker. And there's a lot of bad news out there. And maybe today is just the tip of where we're actually going to have a big break and it's going to carry on. But I don't know, it's the fear of missing out on a trade, I think really tends to put you in a position of making a decision that's probably not going to be a good one. So I try to resist that and say, tomorrow's a new day. I'm not in the right headspace. I'm going to wait for this moment to pass. Because there's a difference between like anxiety about the market when it's making a big move and you're in it or you're not in it. And then the whole fear of how far could this go? What is my position? How am I going to manage this risk? And the risk management part of it in my history, if I've lost a big chunk of money and I'm afraid, like really afraid, I don't know what's going to happen. Is this going to carry on? I typically would liquidate the loss and say, I'm here to fight another day. If I do this, if I don't do this, I don't know what's going to happen. And for me, I'm more comfortable knowing what my limits are going to be than kind of, I don't know, the hope for something better at that moment.
I think what you said there is just incredibly important. And there's a difference between, say, trading momentum and fearing missing out the move. Fear is a state of mind. I want to give a little bit, in case we get into some darker topics here. This is obviously a show where we're talking about the market, so everything is through the lens of the markets. All right, so we don't want to be callous or ghoulish or anything like that. We're just, there's major tragedies that are going on, that have gone on. We might talk about them through the lens of the markets, but we don't want to let that be something we take away from sort of the real human toll. So I just want everyone to know that before we get into, if we give some anecdotes or something about what has happened during tragedies. So with that somber reminder, I'm going to kick it over to Dan, because I know you had some thoughts about event fear and things like that.
Absolutely. It's something you have to think about right now. We just talked about what's going on in Afghanistan. There are major concerns there. And for the people there, you hope the best. You're thinking about them. But we have to ask ourselves, is something like that going to affect US-based indice markets? Right now, it's not looking that way. There are factors that can change that, right? Involvement of the US, what goes on, what's the follow on. But in the short term, those are things you want to think about. Whereas you take a tragic event such as 9/11, happened in the United States, happened in the Mecca of Wall Street, where the stock market is, and we saw major drastic events happen, or market events happen because of that. And so you really have to look at that event and kind of set it aside and look at it. And how is this going to affect the market from the trader's perspective? Not so much how's it going to affect me. I think there are some moral thoughts and things that go through your head when you watch what's going on around the world. And if you're going to trade in that, you kind of have to have that cold-faced mentality of, is this going to affect the markets or is it not? And how do I trade like that? There are so many different events out there that cause fear, that cause uncertainty. We saw one last year, not just this idea of what happened with COVID and possibilities of the economy shutting down, huge rally since then. But you take a market such as crude oil, right? There's still demand for crude oil no matter what. But last year we saw the May contract go negative. And that was really based off the uncertainty of where the hell are we going to put all of this oil, right? So there are major changes that can happen, things like fear and uncertainty. I think uncertainty is one you really have to pay attention to, because when people don't know what's going to happen, those are the factors that are going to send markets into a tizzy downside move. When we start to think pictures get a little bit clearer, we have an outlook, we have an idea, like we saw with COVID last year. There was the uncertainty of, okay, we got to shut things down to see what's happening. And as we shut down, people started getting home, jobs are being lost. There was certainly uncertainty of what our outlook was going to be. And as that market started to break, we started to find the bottom when all of a sudden Zoom, people realized, hey, we can still do a lot of work through Zoom. Restaurants kind of got innovative on how they were going to maintain their business. There was so much innovation that started to happen that gave a clearer, brighter picture of what can happen in the economy. Obviously, it wasn't perfect, but for the situation we were in, we got a little clarity. And that's when these markets got back moving forward. And those are things that you really want to think about when the fear and uncertainty start to set in. Where does the picture start to get clear? If that picture's starting to get clear, we have a better outlook on what's going to happen. That's when we might see things turn around just a little bit.
Right. And I think the picture was also brightened by the Fed printing $7 trillion
That too.
whatever the number was. But still, it's Dan and I talked for about 20 minutes yesterday about this. And there's like a difference between, you can divide fear into like the micro and macro. The micro fear is your position, your FOMO, if you're overextended. And that's its own type of fear. Then there's a macro fear, which I call uncertainty, basically. And the uncertainty at a macro level is, will this event affect the economy or the product that I'm trading? And I think you have to ask yourself that question with any event, because you used to see things where there would be things that were tragic events. And I traded treasuries at the time. So they would, sort of the opposite of stocks. In price terms, they would spike when bad things happened and they would sell off otherwise. But you'd see them spike sometimes on things, I won't go into details, that are like tragic, yes, but on a personal scale, not on a whole wide economy thing. So that's what we saw during COVID. So Mick, you've been sitting there biding your time.
Yes, last but not least. Always last, though. Well, Jack, I kind of wanted to go off of what you kind of just touched on. You know, our conversation yesterday, we were talking about, you know, tragic news, fearful news, and being able to separate that from just being the, you know, the tragic news that it is versus, you know, how does this really apply to some of the products I'm looking at? You know, we all know news travels very quickly now. We all know news usually is bad news when you hear it. You know, juicy stories are the bad stories. And, you know, you hear something, you see a headline, you know, your initial reaction is, you know, oh gosh, this is bad. And you might act on that, where after you know, if you take the time to process some of that news, like you were saying, Jack, like, how does this really affect, you know, what I'm looking at? Or, you know, was I right in taking this action off this headline? You know, after you have a little time to think about it, you know, usually things change when it comes to these markets in regards to some of that. I'm going to kind of go all over the board here, you know, going back to FOMO. I mean, our audience is mainly day traders, you know, fear of missing out. Sure, it's easy to say, you know, oh, I had this idea and the market did this and I didn't capitalize on it. But as a day trader who's looking for, you know, going long and short throughout the day, you know, maybe 5 days a week, like, fear of missing out. Sorry if this isn't what people want to hear, but give me a break. You have so many trading opportunities any given day, any given week. Fear of missing out. If you miss something, you know, you hopefully had a reason why you didn't put the trade on. Find another one. They come up all the time. We've got, you know, we can watch so many different markets on our computer screens nowadays. You're not standing in the S&P pit like John used to, or the corn options like Carol used to. You've got everything in front of you. So fear of missing out, I say, you know, I don't like that. As far as fear of having a trade on too, I've been fearful in trades. I'm sure all of us have been. I know we all have been. You know, you get scared of a trade when you've got a lot on. If you're trading within your means and you've got your risk set up ahead of time and you know where you need to get out if you're wrong, you know, really framing out a trade. I got to get in it. I want to get in at this level. I need to get out at this level, whether it's a pain tolerance or you're just finding out that, if the market goes to that level or that zone, I'm wrong and I need to get out. If you frame those things out, you're not going to be fearful in your trade. You'll take your loss and say, okay, I already knew that was a predetermined outcome. Now it's time to move on to the next one. So there's a lot of things you can do in emotion. So I apologize for going all over the board, but these are just the things that were, on my mind when it comes to fear and uncertainty in the markets.
No,
there's always uncertainty. Nobody knows the exact answers. We have to make predictions on what we think are going to happen, and hopefully we get rewarded for those predictions. But you always have to stay flexible, with your trading, because anything can happen. And if you look at it through that lens, you're not going to have the FOMO. You're not going to be fearful in trades unless there is, something significant that happens during the day. Anything can happen. But that's kind of my stance on that.
One thing I want to add, Mick, you mentioned being flexible. You got to be flexible in everything you do. In the Marine Corps, we have a motto called Semper Fidelis, or always faithful. Well, we have another one that is kept with just the guys, and it's Semper Gumby, always flexible. So you always have to be flexible no matter what's going on. You have to be able to shift and adjust. I look at trading just kind of like a military thing for me. It's all about strategy and how am I going to do this? And well, you know what? They're flanking us on the left. We got to adjust really, really fast. And if the market's starting to change market states, we got to adjust really, really fast. And you got to be flexible.
Yeah. I've never been afraid when I have not had way too much size on. That is the universal concept. I've never been at 25% of my position limit and been like, man, I'm terrified. No, it's always 100 or maybe a little bit more. And that is when bad things happen. So I think that was really informative there, Mick. I know it was okay that you went all over the place there. So is there anything else we want to say about the macro version of fear, right? With like people looking at the markets right now. I mean, the gauge I always use with an event is this event going to do like structural damage to the economy? Is it something that's going to change policy? Is it going to start a war? I think a lot of people our age and younger certainly are still kind of living, September 11th was just kind of a defining moment that changed the way we look on everything, right? And I think it might have led to more overreactions to certain events in the markets that happened later because it was just a clearly terrible thing that happened, and you just knew that everything was going to change then. And I think you need to evaluate sort of what the real effects of something are going to be down the road before you start tossing money around at things.
Yeah, I think what Dan and Mick were saying is all completely true, especially if you're day trading. I hate to be callous, but instead of, looking at a situation as being scary or fearful or anxiety inducing, any move in the market can be looked at as just another opportunity for me to take advantage of what's happening. And everything you're saying is just like so very true and so very accurate about how you should approach the market and how you should approach every single trade. I think part of, like, as a beginning trader, or maybe someone who's had some bad moments in the past and has a little PTSD, the hard part is being self-aware enough to say what I'm thinking or what I'm afraid of or what I'm feeling is not important. Just put it aside and say, what is the market giving me right now? And even then, it's obviously not always easy to decipher. You could make an argument today that the US economy is an engine that is churning and it doesn't really matter what's happening. We are going to bounce back from this. And you could, probably convince yourself that this is the bottom that you should be buying right now. So it's just hard to kind of take your own opinions out of it and just kind of focus on it as a strictly empirical, non-subjective opportunity in front of you to participate in.
Yeah, you certainly have to, though, because we like to bring up, in a lot of trading media or movies and stuff like that, they tend to focus on the selection bias of the people that were right with their convictions, who went all in. Like what went on in The Big Short or something, I mean, unless you really had inside information of something, I would never recommend that someone make trades like that where they show, Michael Burry losing month after month after month after month after month, and then he's right at the end. Sure, he was. Tons of other people weren't. And every day there's tons of people that get shaken out because something they believe is going to happen, that they're the only one that knows, blows up in their face, right? So you got to manage your risk. You got to be aware that the market doesn't really care what you think, and that you're probably not Michael Burry in The Big Short either. So just a little advice.
Jack, you mentioning that makes me think of Hogue, something you've said for years. Markets can remain irrational longer than you can remain solvent, right?
Right. Yeah. And, that's, as long as you established your risk ahead of time, you really shouldn't be afraid of the risk, as long as it's manageable, as long as you're not oversized. And, the thing about the ambiguity or of the marketplace is, the markets are always changing. It's once we have the right answer, the market's going to change the questions. 1 + 1 rarely equals 2 in this environment. And we just have to take the chance, take the risk, and hopefully be right once in a while. We're talking listening to Carol talk about the PTSD of being in the trading pit during big events, and boy, there's nothing that could be more true than that. I remember, Carol, standing in the pit and just having my hands and feet go frozen cold because of the fear, taking all of the blood from my extremities and bringing it to the major muscle groups and organs, because the fear is that great during those times. And you're right, you can choose not to participate, come back tomorrow, be a whole person, and see what happens then.
That's the greatest thing about the short time frame day trading too. You can choose to stay out of that stuff. When you get bigger and you're carrying those positions, there's nothing you can do other than try and trade through it. And that's when, I know a lot of people want to get to that point in their trading, but you got to ask yourself, is that a stress level I'm willing to take? I don't know. That's
what was the quote once, Mick, where you're talking to some trader who compared something that they were doing to Paul Tudor Jones or something?
I think someone made a t-shirt out of that.
Yeah, that someone was us.
Said something along the lines of, "You're not him. That dude's a billionaire," I think.
Yeah, like it was just something about comparing it. You got to know kind of where you're at in your journey and adapt appropriately. Now, we could probably go on talking about this all day, but this is probably a good time to end it for now. I mean, fear in trading is a huge topic. So, Dan, do you want to inspire us with something?
I do. I got a quote from one of those billionaires, Mick, Warren Buffett, which I think this one's pretty nice. I think a lot of people were able to, find opportunity in the break that we saw last year. So from Warren Buffett, the future is never clear. You pay a very high price in the stock market for a cheery consensus. Uncertainty actually is the friend of the buyer of long-term values.
Well, that's a good optimistic way to end it here. Just wanted to thank Carol so much for stopping by again. Always good to hear your insights. And Hogue, why don't you sign us off since you're so good at doing that?
Oh, sure. Let's see. Talking about ambiguity and risk, you choose the risk you take. You know the risk you take. You can choose to stay out. FOMO only entices those to make bad decisions. Avoid the FOMO, trade your journey, trade your process. And we're looking forward to seeing a lot of successful traders. So get in the right mindset, understand the market situation, and get out there and profit. Have a great day, everybody.
No more FOMO, folks. Imagine it, like John Lennon. See you next week.